All right, I should be live. I've got an echo going, don't I? All right. I assume you guys can hear me. Thank you, Patrick. What's going on, Patrick? Wait a minute. I've got myself muted. There we go. Okay. Anyway, stop messing with the sound. Steve, hello, Bill. Thank you. Let me make sure that I'm on the right audio setting here. Anyway, welcome as people file in here. Hello, Truth Seeker, Patrick. Patrick, I got lots of silver stuff going on. I don't know. It feels like this is the time more than any for the gold and silver play with all the headlines. Bill, you were having trouble with your price alerts this morning. There we go. If I recall, sort by status, sort by symbols, double click. I'm not sure what could be going on for you. And if you say none of your windows are sorting now, I'm pretty sure you're on the, you have to be on the Windows app. Check and see if there's a newer version, Bill, on our download page than what you have. I checked your version. I thought it was pretty up to speed. This is the only report I've got of this. And if you have any ability to send like a video too, you could send that back to our email help. Sorry that's happening. Weird. Okay. And I don't know if Chris has taken a look at it yet. He's pretty much the wizard around here these days. Because I went ahead and jumped in on that one. Back trading again, still recovering from spinal surgery. Yeah. Okay, you're on 104. I believe there might be 105 is what I'm on. However, let's just look and see. Download. Yeah, see, you're on 104. Go ahead and download this beta, and that'll overwrite your current version. And that's usually going to be like one of the first things we would suggest for a fix. And then if that doesn't work, come back to our info@trade-ideas.com and give us an update. Yeah, with GLD just started taking off back here in December, first of the year. And I just saw somebody else. What was it? I've actually got it right here. Hold on a second. Look at this. U.S. gold imports are shooting up, and it's very timely, isn't it? With Trump talking about auditing the Fort Knox, and then auditing Federal Reserve. Dream come true. So it's almost like there's been a tip, and these countries are scrambling to kind of bring back all the games and the silliness and the leasing and the double counting they've been doing, and get the physical stuff back where it's supposed to be. So that's the headline. And you guys know me. I want to know, does the story confirm, does the chart confirm the headline? Well, in gold, it certainly does. That repatriation chart, as well as physical, is, let me take a look at the market here. Yeah, we're rolling back over. Yeah, Jariah, I see your comments. I'm also watching the market roll over here, and it goes to your question too. Learning curve. I don't know how much of a experienced trader you are, but I'm pulling up the price action here on our NASDAQ. And for the regulars that come into my session here, they know I'm a stickler for the 15-minute chart, and I use this 10 SMA. And when I see a gap down and fade up into, and then the selling just starts to hammer, that's extremely bearish right here. So Andy was just sending me a note, like, watch your positions. So, but to answer your question, there is something that can really help get you started. I hope that you haven't seen this yet, because if you haven't, it'll be the place to start. It's literally called, and I'm going to show you getting started. Here comes the link for that. And over here on the left side is the chapters. It just works everything through. So, you got feature overview, which is kind of more salesy, but once you're in the system, version comparison, that's going to be older. But this is the basics right here: downloaded installation software layout, how to use the free floating layouts, how to use docked layouts, channel bars. But again, I don't know what your level of trading expertise is, so that'll kind of determine where you go next. We have a lot of, as I said, channels that are free, pre-configured layouts that are, I would say if we go to new docked channel bar, this is usually a great place to start, because these are the free, the pre-configured layouts in which I speak of. Now notice there's a button here. Very important, this button, show more. This is a lot more going on down here. And a lot of people will start on pre-market. And before the market opens, you've got this whole layout showing you all of the names that are gapping up and getting ready to start the day. And then when the day starts, you've got explosive winners. So this is just kind of a quick get started template, but Trade Ideas can do whatever you want it to do. I've got this scan here that tells me exactly what we're seeing. Show me stocks that are strong, but are pulling back and touching the 10 SMA. And that's really the genius of Trade Ideas, is that's exactly the vision, the visual that I want to see when I'm programming these scans. So yeah, you can program your own scan, or you can use the pre-configured template. I'll show you something else, Jariah. We've got something here. It's kind of buried. It's hard to find, but it's in that document. It's called the Market Explorer. And like I said, maybe a lot of people. Hang on a second. People might be looking for just simple pattern recognition. So everything starts here under new. And there it is right there, Market Explorer. So you open this up and you're like, what the hell do I do with this? What you want to do is right click, and all of a sudden the strategy menu is just loaded. Oversold, RSI, overbought. Here's the strength alerts. This is our weekly swing picks. Pattern recognition. I mentioned this earlier. So maybe people like bear flags or bull flags. Show me a bull flag here in this bad downward market. So here's a list of ideas. The ones that are most recent are at the top. And if I go through here, these are technically supposed to be bull flags, bull flag. But this scan is not telling you to reach out and buy this. What you have to do is, again, why I asked how much experience do you have trading? You use kind of a 1-2 punch here. So here's the baseline scan that we're going to use. But say I'm only going to be interested in HLF, Herbalife, if it can break above this consolidation here. This is basic chart reading. So we have to have some understanding of chart reading. I hope you do. If you don't, be patient and just want to learn it. But consolidation after a big move is very important. And what we can do is here's step 2. We go right at the top of those 2 highs and we right click and we create a price alert. And we can give ourselves notes. We can say, Market Explorer, flag. And this is how we found this. So now I'm setting it and forgetting it. That blue line will sit there. If the price comes up and triggers it, I'm going to get an alert in real time that pops up, and what I wanted to buy might be a good buy in the moment. So those are just a couple of really quick getting started quick stuff. But I would go to the link that I dropped, and you can use that user's guide, and you can click around on the side column and jump from idea to idea. But this is a very rich and powerful program. And since it's not something that, you should expect to want to learn and master in, a week. I would say it takes a couple weeks to really understand what you want to look at, what you're getting, and then you save that layout. And that's the layout that you come to every day, and it becomes your workspace. But, we can help you with scans or getting started with a scan if you know what you want to see, or we can try to point you in the right direction. All right, so back to the market. I kind of like to talk about the market sometimes when I come on here, some trading related stuff. This is not good. The buy the dip market has not been working. And if you've been trying to buy the dips when it worked back here and you realizing what I'm saying is resonating, then we got something to talk about. Technically speaking, bear markets, I think, are a percentage pullback. I can't remember what it is, 20%, 15%, doesn't matter. To me, look at this long protruded daily chart here in the NVDA Qs. Pretty strong trend line, basically held up by our 200-day moving average. That's about as flat and trendy as you can get for a simple moving average. So here we are, just like back in here, we tested it with a gap down, and we traded right back up through it. Oh, look at that, even more so. So this is going all the way back to the base of October 22. From 250, 260, we've doubled here in the NASDAQ since then. It's been a straight shot up. But at some point, this is going to give way. All right, it did not give way here, and it did not give way here or here. But it is going to give way at some point. I don't know if today is going to be the day, but what I'm watching for, and this is a significant day here. Yesterday and the day before, you see we traded below, right? But we popped back up into the range. And that's why I like to wait until the market is close to closing each day before I make my swing trading decisions. Meaning, if I had sold down here 2 days ago and watched the market bounce way back up and get green and close, I would be feeling pretty bad. So I like to wait for the market to close. Well, the last 2 days, it tested our 200-day moving average, and then it bounced. But today we're on day number 3 now. Is day number 3 going to be the same? Well, we've got a half of market left to go. And I'm going to tell you, if we close with a lot of red below this rising 200-day moving average, I'm throwing up major caution flags. I'm not long very much stuff at all. And the stuff I am long, it's in silver. CDE, I bought a couple yesterday, the day before. I'm in PSLV, the physical gold, physical silver fund, which quickly is not to be confused with SLV. SLV is an ETF, and they probably couldn't justify all of the silver they claim to have in their prospectus. Again, I'll take you back to all that gold being repatriated. Something's up. U.S. gold, their gold is being summoned back to our country for some reason. Very interesting. So silver is a proxy play, and if anything, it can move faster than gold because sometimes it just needs to play catch up. So I'm really interested in silver right now. So I'm in this CDE, I'm in this HYMC. I'm also interested in copper. I'm in FCX. I bought copper this morning. I looked at it at the close yesterday, and I said, I want to keep an eye on this. And so using the 50-day moving average here to prove my thesis, it can't get above this last few weeks. But I'm taking a chance here. I'm thinking that the tides are turning, and if I can be early here and get a nice big green candle, this FCX copper play is something I might stay in for a little while. So I've really switched over, as you can see, to silver, gold, commodity type play. All right, hey Jerry, I'm glad that helps. So if you've got the Holly window, I'll excuse me, take it a step further. I'll bring up. And this is just the basic AI strat window. I'm not using the channel. I'm not using anything other than I just went to new strategy trades. That's all this window is right here. Now this is, it's filtered. It's filtered to look nice and pretty. We can unfilter it by unchecking and showing me all trades. Hey, that's not bad. You know, I expected one more bad trade. This is not a bad day for Holly. So we got longs and shorts, but I'm going to put this back on because I'm going to try and make a point. The idea of any profitable trade is just us. Yeah, I will, Edwin, no problem. The idea of filtering Holly to any profitable is just saying, you know, I want just a watch list of ideas. Now, it doesn't always necessarily mean you need to buy the trade when Holly comes out with it. Ideally, that's what will work. And here is the trade right here. And whoops, and that one did work. Trying to get my pen. But let's say you missed it. You missed it. We have a secondary opportunity here. And this is perfectly timed with what I try to teach. My 15-minute chart, and I'm using a 10 SMA. I will take strong charts, which the AI is alerting us to, hey, there's volume, 24 times relative volume. It's moving up. This is a strong chart. There's something happening here. If you missed that first move, as a new trader, I don't ever want somebody to come in and chase something that's way above the 10 SMA. The closer you can buy to the 10 SMA, a strong stock, the better. So right here, everybody that chased up here at $1.48 just got pulled back pretty quickly. But now it's an opportunity because it's on the Holly list, and we're applying at least my idea of what a good technical setup is to wait for that pullback and use this ALXO as a buy on the 10 SMA. Now, if you're wrong, you wait for the first closing candle to close below and you get out. So this is, again, for the new user, Duraya, who just maybe want to look at the AI. Here's another opportunity here. We missed the blue line, but look at setting up again. Maybe it's going to set up for a secondary move. So it gives us opportunity all day to just watch these trades and use them as ideas in real time. But you got to kind of have a strategy with what you know you want to do with them. If you can't get to them quickly, ideally you buy them as quickly as you can, close to that blue line as you can. Okay, yeah, as I save my layout, I'll go back for Edwin and talk about silver, a bit more of what I'm looking at. Okay, so I'm going to save my layout. I'm going to save my entire layout, and that gives me the code to copy most of it, but not symbol lists. And there is for the trade. Okay, we'll get to ACON in a second. So back to my silver thesis. The NASDAQ is the one that led us up, led us higher, you know, NVDA and all that, Tesla. But it's also the one that's leading us lower. Look at the S&P 500. The S&P 500 hasn't even touched its 200 SMA, which is a whole other story in and of itself. So we're still probably waiting for the S&P 500 to test its 200 SMA. Probably going to happen today. But again, if you came late, at the end of the day, I'm going to be looking, is the NASDAQ red and below the 200-day, unlike prior 2 days where it bounced back into play like a stick save hockey goalie? Or are we finally giving way to the sellers, and the sellers are starting to just demoralize the dip buyers? Imagine how many dips that have been bought over the last week. They bounce, you get excited, or even worse, you buy the bounce, and then it immediately rolls over on you, and you're just constantly putting in stops, stopped out, stopped out, stopped out. That's the anatomy of a bear market, and that's why I feel we're very close to one. The tides of the winds and the currents, they've all shifted. I do this stuff every day. I've done it for 25 years, mostly every year. I took a couple of years off to do different things, but I've got 50,000 hours of watching price action. I'm going to be 58 next month, or this month, God's sakes. So I've got a feel for the jump rope, and everything has changed the last month. Dip buyers are just getting run over, even myself trying to buy dips, and I'm having to constantly remind myself, you've seen shitty markets before where it doesn't work. Don't fall victim. And these are the markets that, you know, are trader killers. I mean, I'll be honest with you, we've seen a lot of cancels recently, and somebody in a meeting asked, what's up? And I said, hey, let me just tell you, the market got really hard the last 6 weeks. That's why we're having a few cancels more than usual, because the dip buyers just keep getting demoralized, and nothing can blow up at an account faster than having the confidence of 2 years of buying the dips and just being an awesome trader to the upside. When everything changes, if you don't change, it's just a matter of time before you blow up. How much risk are you going to take each day before you change your methods? So on those heels, Edwin, I'm not interested in buying stocks long, especially in my 401k, which I'm so fortunate enough to be able to trade. I can't go short stocks. So I have to find what's working. And to me, the gold and silver, here's GLD, looks nothing like the NASDAQ, does it? There is silver, looks nothing like the NASDAQ and S&P, does it? It's above its moving averages. Plus, we've got headlines. So the chart is confirming the story. The story is people are talking about a gold-backed dollar. People are talking about Fort Knox. Is there gold in Fort Knox? Trump keeps hinting at a golden age. Gold, gold, gold. The signs are everywhere. So silver is my favorite because it's a proxy to gold. And when it plays catch up, it can do so extremely fast. It did so back in 2012. Check this out. You guys around, you remember this? 2010, it went from 17 to 50 in a couple of months, 5 to 6 months. It can do it again. Look at this monthly chart. Is that, I mean, come on. Talking myself into even more here. I'm extremely bullish on silver. All right, that helps. Jiraiya, part-time trader, 2 years, full-time. Just make your mistakes cheap. Any help you can get, find the time frame that works for you. I'm a swing trader because Barry's a day trader, but I'm a swing trader. I've got emails, I've got meetings, I've got so many distractions during the day. As I was alluding to, the end of the day, the last 10 minutes are my key moment in the day. That's when I go through my garden and I pick out the weeds. One of the greatest things that's happened in the last year was, and some of you know this, your brokerage account went from a settlement of 3 days down to 1 day. And that's a gift for me because I can recycle that cash at the end of the day. If I see something that's closing below a moving average, like I was talking about, the NASDAQ and the Qs, the S&P, if I see at the end of the day 2 stocks out of 7 that I'm holding that look gross and they're rolling over and looking, the end of the day is my decision point. Middle of the day is a guess. Getting a lot of red here. We're probably going back to lows. Yep. This is my ticker right here. When this thing is, it's an S&P ticker. So as S&P stocks go to lows, I feel the pulse. I don't even have to look over. I just feel what's going on right here. And there you go. The S&Ps are at lows. Sorting issue was mouse click speed. Oh, go figure. Did Chris figure that one out, Bill? So figure out your time frame. You're a day trader. Can you give any advice? Well, day traders might like to use more of a 5-minute chart, but again, since I'm a swing trader, I use the 15, and I have seen so many correlations with these two moving averages that I'm using here. This is the 5-day, and the 10 SMA is my momentum. So the 5-day is a general trend, a general area of interest. It's not surprising that we kind of sold off there yesterday. NASDAQ would be even worse. Oh, you did. Nice job. So that's not to say you can't day trade. I day trade also. I'll day trade things when I feel like it, but I'm still going to use my 15-minute because this is my go-to setup. These are the only two indicators I need. Look at this. There's the high 5-day moving average. 5-day moving average couldn't get above that. Now all of a sudden we couldn't even get back to the 5-day moving average. The momentum line caught it and it's throwing the price down to lows. This is nothing bullish about this. This is bearish, bearish, bearish. So you can day trade off of this setup. And I'm going to do a favor, if you want it, and anybody else. As a standalone, I can give you my 15-minute chart as a standalone, and you can just copy and open it through the cloud and use that chart. And just keep it up and watch the correlation of this blue line, which, by the way, is nothing more than a indicator SMA, simple moving average, with 130 periods. If you don't know, 130 15-minute candles equals a perfect 5-day trading session. So rather than look at a 5-day moving average over here, another line on my daily chart, I've got it nice and smoothed out. And it's a major area of interest no matter what stocks I look at. There's always something going on, overbought or oversold. I like to buy stocks when they've pulled back down to the 5-day moving average. I like to be the buyer here. If I'm scalping stocks and I think I'm just going to get a small bounce out of it, I did this yesterday in Nibis. I said, I just want to sit in this thing. I'm not going to get much, and I sold. That was as much as I could expect out of it. So you use this line for many different things. You use it to gauge sentiment. You use it to gauge your out. You use it to gauge setting up a short sell. That's the perfect short sell setup right there. It's a down sloping moving average, and the price feebly bounces up to it and loses all of its energy. This is where you short sell. So if you're going to be a day trader, Jirai, you got to learn how to short sell. And what I don't want you to do is to be the person who waits and waits and waits and short sells this setup right here. Oh, it's expended all this energy and now it's breaking. This is where the algorithms and the quants prey upon the weak hands. It's probably going to just bounce right back up into play here. And that's no fun when you're shorting stocks that are already oversold. So shorting is done in a bounce. You sell the rips, and in a bull market, you buy the dips. I'll leave you with one more thought, Jiraiya, as a new trader. Just try to always be as contrarian as you can. If you find yourself day trading and you're chasing green candles, you'll probably find pretty quickly that you're late and the price might reverse on you. Check my holdings here. Ugh, giving a lot back. So FCX, I'm going to stay with this one again. Why? Well, again, this is the theme of mining, but we're mining for copper in this case. Now, I'm okay with this because I might have chased this one a little bit. I probably chased it on the daily chart. Okay, meaning, what do I mean by that? Meaning down here would have been a great contrarian buy, but I wasn't feeling in the mood to buy down here. So I bought an entry position here. And I need this to close, like I've been talking all along. I need this to close above what has been its nemesis until now. Just like that 5-day moving average on my 50-minute chart, this is a 50-day moving average. And it kind of has the same significance to me that this line does in terms of the time frame. It's an area of interest. And when you can get back above it, it kind of tells you who's in charge. So for FCX in the short term, the bulls are back in charge because they're back above this 5-day. Now I might have, I bought it here on the open, and it's probably going to chop around a little bit. But what I'm really focused on is over here. I need this to start building green candles the next couple of days, and I'm willing to sit in it as long as it stays above this 50-day moving average, which would start to flatten. So I'm trying to put a thesis together: gold, silver, and copper. That's what this play is all about. Okay, MT Sharp. Did you hear my philosophy about selling the rips? Don't short the brand new lows. That I didn't see your question, but that is directed to you for sure. What's the best way to trade a bear market? Is find these down sloping trend lines, and find things like, what was I looking at a second ago? Nibis. These down sloping, or actually the Qs. I'm sorry. Look at the Qs. Down sloping 5-day moving average, as I just shared that chart. Bring up that chart, MT Sharp, and use that and say, okay, I'm shorting. Is the 5-day moving average sloping down? Yes. Okay. Am I shorting as close as I can to the 5-day average after a bounce? Check. If you can do those two things, it doesn't matter what stock you're shorting. That's the way you want to do it. Where people get in trouble is right here. They look at the NASDAQ and the SPYs and they go, oh my God, the SPY, they just broke yesterday's low. There's probably a ton of stops under here. Well, for some reason, those stops always get eaten up by Citadel and the other algo traders that are just licking their chops. And there's very, very few setups that I would take short right here. To be short, you got to be patient. You got to wait for your pitch. All right, let's do something fun here, Joy. I'm going to take this scan, turn it off. I'm going to duplicate it, and I'm going to flip it because that's a bullish scan. We're not in a bullish market right now, so I'm going to use this flip button. Only Trade Ideas has this. It's pretty cool. I'm taking a strategy concept that's a long strategy that I want to buy the dips, and I don't have to use my mental brain power and go through and invert these myself. I'll just do that and then launch it. Now I've got something different. Let's see what's happening here. So juxtapose these two. These are stocks that I've programmed to show me that are strong. Up 4 days, minimum 4%. Okay. But down today, but I only want to see it if it's near the 10-day simple moving average filter. So strong stocks pulling back and touching their 10 SMA. Boom, just like that. That's what I'm looking for. Maybe. This helps me be contrarian. Look at that. I was just talking about don't buy the high, wait for the pullback. Well, the same applies on the daily chart. So I'm using Trade Ideas to scan in real time things that are strong, but they've pulled back and they're touching the 10 SMA. Well, if we're in a bear market, I just flipped that. So let's look at the opposite. These are stocks that are downtrends and they've had a couple of up days. This is exactly what I was talking about. Well, over here, I probably wouldn't take this short. It might have been more interesting here, but let's look at a couple other examples. This short would have worked really well yesterday at the declining 5 SMA, but it broke through, so I'm not interested in shorting this. I mean, anything that's above the 5-day moving average here, I'm not going to be interested in. And that, again, is Trade Ideas. You've got to filter through the data set that you're given in real time, and it'll keep updating as things happen. But you've got to filter through and decide which ones you want to work on. So let me just qualify why I don't like these. These aren't really lining up they're lining up more on the daily chart. I'm getting exactly what I'm asking for on the daily chart. They just so happen to be way above the 5-day SMA. So, you know, those two time frames aren't exactly lining up perfectly. But here's another example right here. So again, using my momentum line, this thing has been under severe momentum to the upside since yesterday, correct? Well, it doesn't last forever, does it? So NEO might be an interesting short idea right here. And I'll go ahead and say the daily supersedes whatever I was just saying about being above the 5-day. You know, the daily SMA, the daily 10 SMA is a stronger indicator than this one, the 5-day. So what we would do is we would say, okay, we have a nice setup here. I'm still guessing if I shorted at this moment, and I'd be mad at myself if it bounced back up and held this momentum. However, what I can do is I can put a price alert right here under these lows, and I can set it and I can move on and go about my business. And I guarantee, I don't guarantee, I bet this price alert will trigger before I sign off. And that would be the workflow for setting up a short trading position right there. You've given yourself a contrarian entry. You used a trade ideas scan to find bounces of stocks that are down, but they've bounced up and they're getting corralled by the 10 SMA. Then we switch over to our intraday time frame for timing. We're still guessing right here, but if we can break this momentum average, there's our trigger. And what's our upside? Our downside is this. That's a good risk reward. We're risking a new high to try and short and cover down here. And that's as simple as you kind of want to make it for anybody watching. Jayara or MT Sharp. All right. So yeah, the SMRs, the nano nukes just went to bed. They went night night along with the quant stocks. They all went night night too. That's right. Acon, Truth Seeker. I forgot I owed you Acon. Yikes. So is this a reverse split? It's got to be, right? I'm thinking our data is just a day early on trying to catch this up. Well, all we can do is go intraday now. So intraday, you've got this going for you. This was the moving average. And again, if this is just a bad data chart because of a reverse split, none of this really matters. I'm not really sure what's going on here. I mean, is this a reverse split that just wasn't accounted for? I don't know what I can say much about that. Technically speaking, I've got nothing to work with. I will say that anything that gaps down on bad news like that, it's very difficult to get it to reverse on the same day because usually people are just stubborn and it takes a day or two to wash out the stubbornness. Okay, so Edwin, great question, and I'll read that. So Edwin's been experimenting with using what Dan's been doing over on Grok or GPT, and a lot of times it comes back with a collaboration link, and that collaboration link is got the filter set correct for you, but it's leaving the heart, and that is basically a placeholder for a new event. So you either need to instruct it that it's missing an event and please select an event to replace it, the heart with an event. And then you would open that up in an alert window. Otherwise, you can open that in a top list window where it doesn't need a heart. Or your third option is to create your own event, which likely could be a new high, a new 5-minute high, or whatever makes sense to you. You can replace that heartbeat with the event that you want to use. All right, let me see if I've missed any questions here. How's the money machine coming along? Well, Dan and Brad keep finding ways to improve it. So while it started off as a great concept, it's getting more and more improved and more fail-safed and more configured to our existing architecture, which things weren't really apparent that early on. So there's many spokes in the wheel. It's taking obviously longer than we want, but in the end, it'll be a much better product than it had been if it had been rushed. Yeah, I mentioned that too. You can ask the AI to suggest one of the alerts for you, which is good because you're essentially training the alert that you don't want something given back to you with just a heartbeat. So for future reference, it should be able to. I think I've got it to do that before. I haven't played around with it nearly as much as Dan has. All right, caught up. Just out of curiosity, these other two. Yeah. But that was the power, again, for JR, a new user who maybe didn't realize you can create exactly what you want to see. And then when the market turns on you, you can just quickly flip it over and change the concept with a push of a button. Now we've got these ideas of stocks that are in a downtrend, but they've bounced. And again, short selling, I love it. I love buying the third day of selling on a dip in an up market. And if you're going to short sell, I love buying the third day on a bounce, the dead cat bounce, they call them. Oversold bounce. See down here, this is why you don't short the new lows. The people who shorted that new low down here, it's short-lived. It's always short-lived. You're much better rowing the boat in sync, waiting for 3 days of bounce. And the scan that I just kind of popped up just gives me a short list of ideas that are hovering near their declining 10 SMA. So that's the power of trade ideas. Nobody else can do. But you've got to marry it up with, knowing what it is you want to see. That's where it gets really powerful. Okay, I think I'm caught up. Look at those small modular reactors. They were cat's meow back here in the fourth quarter, but they've died. SMR still has a big short float. They just had earnings. We're getting a pinch play here. I'll be watching this closely. If SMR can pinch its way back out of this and hold this 200-day, this might be a whole new ball game up here. We'll see. It seems like Oklo is the strongest of the three of them. Its 200-day is way down here still. Not getting a lot of bounce here in the general market. It seems like a foregone conclusion. The spies are probably going to want to come and kiss the 271.50 level. The algorithms will all recognize a 200-day SMA touch very closely. Maybe that'll change things. Maybe it won't. I don't know. Again, I'm probably really early on this copper play. We'll see how it closes at the end of the day. If it gets worse than this and closes back under the 50, then I'm going to put it back on the shelf and wait. Like I said, I get my money back tomorrow with T+1. PSLV holding its trend. If we look at the dollar, this is a dollar ETF. The dollar, speaking of 200-day moving averages, broke hard. So that's one of the reasons the silver and gold are still doing really well. These are silver, and two mining stocks that I've looked at, and FCX. That's it. That's where my head is. Where my head is right now. All right, guys, I'll be here another 10 minutes. So if you came late and you were maybe sitting on a question, now's the time to do it. I can look at a chart. If you want me to look at a chart, we can talk trading, we can talk scanning, whatever you want to talk about. Oh, I just got stopped out of something. I was nibbling DJT and I had a very, very tight leash on that one. Nothing special about that. So I cut it quickly. Seeing a lot of red coming through, so I assume spies are back on lows. Yep. And we are touching the 200-day. So let's see what happens here. Here's the magic number. That should do it right there. That looks pretty close to me. And I just saw a vacuum of sell stops right at the 200-day. So again, this is not where I would jump in and short the market, even though it looks like the world is ending. We're extremely oversold here. Look at where the 10 SMA is. It's way up here. 20 SMA is way up here. We could easily really sucker some people out here in the next hour and half an hour and then just bounce again like we did the last couple of days. We'll see. But the NASDAQ touched its 200-day the last 2 days in a row. And it's looking ugly here. The Russell 2000 is well below its 200-day, and we've got crossovers happening all over in small cap land. Small cap stocks are not doing well. If you've been in small cap stocks and you see the market going to highs and you wonder, why isn't it taking my small cap stock? The NASDAQ's on highs. Well, that's because Apple and NVDA are running, not your favorite small cap. And then you'll notice the minute the NASDAQ and the S&P get a couple of red ticks midday, what happens to your small cap stocks? They go down threefold very quickly. And that's like what I've been noticing, what I said on the onset today about the changing winds and the dynamics in this market. It's very different right now. Do not be lulled into thinking you can just keep buying dips, because if you have been, then you're probably very familiar with setting stops and getting stopped out, because that's what's been happening. Or you can learn to short. And once you learn how to short, it's like getting your tennis down in your backhand down in tennis. You can cover the entire court, no matter which way the ball is flying at you. Still on lows here in the SPYs. NASDAQ down 2.6%. This is the leader. So a big tree fall hard. What goes up quick comes down quick. And that's the NASDAQ. I haven't even looked at NVIDIA today. Pretty ugly. I think NVIDIA pretty much broke back here. See, is that close? Like I said, once a stock closes below the 200-day, it's like the death knell. It can't, it's very hard to recover. And then the moving averages start to cross over, and that's ugly. Somebody even mentioned the Dow, how bad the Dow has been. Well, interestingly enough, it's not touching its 200-day. I just learned that. That's not what I expected. Look at this wall of ice here, the support. The Dow is just looking for a crack in the ice here. Not a healthy, good-looking market, regardless of what any headlines might say. The price action is really bad. As I mentioned earlier today, like at the end of the day, as a swing trader, I'll go through my garden and pluck out the weeds. And if FCX were to close right here like this, I would pluck it. Because my intentions were guessing early. I needed it to get up out of here and close out of this range that it just can't get out of. So if today's just going to be same thing, different day, I'm not sticking around. I'll wait. But that's an example of how I wait for the end of the day to see what I want to pick. I'm well in the money on PSLV. My entry is basically down here. I'm well in the money in CDE. My entry is down here. I'm pretty good in the money in HYMC. I only bought this one today. Out there. So FCX is the last one, and it's the only one that I would just not take home at the end of the day because it's not cooperating. Over here is a short squeeze scan, but playing short squeezes is kind of hard in a seller's market. They seem to have control, so wouldn't focus on that. When you enter trades, what % of profits are you looking for? That's a good question. See if I can convert this. I'll say this. I really love playing small caps when they're working, but I haven't been giving them much comfort or confidence lately because they haven't been working. I love playing the levered ETFs when I can. As far as a % move on my swing trading, I would probably not risk. In terms of an entire account, you probably rarely see me risk more than 1% of the entire account. And I'd try real hard to make 2 to 3% on that. So you can convert that to a $50,000 account. If something gets down $500, it's got my attention. But once it gets up around $1,200, $1,500 on a $50,000 account, just using that as a simple baseline, that's where you want to start taking profits. Now, I had a bid to buy more HYMC. It looks like I got filled on that. Forgot I had that out there. That's all right. So $100,000 account, I'll risk 1,000 to try and make 2 or 3, ideally 3. And in the process, if it's really going, and if you're really disciplined, maybe you leave a small chunk of that trade and maybe you can make, an extra % or 0.5% on a small piece that you just take your eye off and don't even worry about. A trailer, as they call it. Now, if I'm just day trading, like I mentioned Nibis yesterday, I wasn't looking for a % move yesterday. I was buying it down in here, and I was saying, I'll take whatever I can get, but I'm selling here. I know that. I'm not sticking around long. And if I had swung trade that thing home, I'd be really miserable right now. Here's a perfect example. It gaps down. Where does it find the sellers? It finds the sellers at the declining 10 SMA. This is why I use this time. Look at how perfect this lines up for me. Doesn't matter what stock I plug into my 15-minute chart. It tells me declining, caution. This is about as much as you're going to get out of a bounce right there. If you missed it and you kept it overnight, well, this is about as much of a bounce as you probably were going to get right there because the 10 SMA got a hold of it. So these are my guardrails. This is my main guardrail, and this is kind of my guiding hand. And that's it. Oh, that's a totally subjective question, Edwin. I couldn't answer that, but I'll tell you what I allocate. When I allocate something, it's usually 10% of my account. I've been known to do a lot more, which I'm doing right now in silver. I'm not even going to tell you. But if I have good conviction, I might go 15%. If I'm really think I've got a good one, I might go 20 or 25. But that's very rare. But I'm doing that in silver right now, maybe more. So as a good rule of thumb, 5%. Like if I'm not sure about something, I'll take a 5%. So if it's a $100,000 account, I'll go in for $5,000 and just kind of watch it, and then watch the guardrails of how it performs. And if it starts to work, I might add to it maybe once it clears the 5-day moving average on the upside, and I'm getting like a secondary confirmation using my indicators, then another 5%, then you got your 10% position. So usually a 10% position of your total account. You're using numbers, and that doesn't translate to anybody except you. So that's why we use percent. Oop. I've actually got to run, guys. I got another meeting, and I got to take a quick break. So that was a good question to end on, Edwin. Appreciate that. Yeah, you're starting the S&P from change from the close, strange the number of stocks are up. Yeah, everything's strange right now, Bill. I can't make sense of a lot of it. So I step aside, and I'm just kind of focusing on a sector that I think I like. All right, guys, I got to run. Andy, we'll see you here tomorrow at the same time. So thanks for all the questions. Bye.